Crypto Pirates Daily News, August 24, 2021. Latest news headlines. Crypto.com provides tax services. Does it report to the Internal Revenue Service, IRS? PayPal is expanding cryptocurrency services in the United Kingdom. What you should know. This is something to look forwards to for traders and investors who are hodling EOS. AMP price increased by 12.64%. Is now a good time to buy AMP. This year's crypto savings accounts to get you in the game. Australians may now spend their crypto through new cards. However, they will incur a tax liability. Customers Bank intends to offer banking services and blockchain-based payments to crypto enterprises. Crypto.com provides tax services. Does it report to the Internal Revenue Service, IRS? In the cryptocurrency world, Crypto.com is a mobile application that enables users to purchase, sell, trade, and earn cryptocurrency incentives. Additionally, the mobile app provides users with crypto credit cards. Crypto.com is a financial services company with the objective of empowering consumers to take complete custody of their funds and enabling exposure to cryptocurrency. Given that customers must complete KYC, Know Your Customer, to open an account, prospective users want to know if Crypto.com files tax returns with the IRS. Crypto.com was previously known as Monaco Technologies when it launched in 2016. Chris Michalek, the company's CEO, founded it. With the slogan "Spend Anywhere, Without Costs," the company has developed into a full-fledged international Bitcoin exchange. Its ecosystem includes a mobile application, a cryptocurrency exchange, a wallet, a decentralized finance exchange, educational resources, and its very own credit cards. The primary benefits and drawbacks of using Crypto.com. Crypto.com is well known as a beginner and user-friendly platform due to its regulation and perceived trustworthiness. With over 100 trading pairs and 20 fiat currencies supported, the site enables users to acquire cryptocurrency with a credit card, fiat, or crypto at extremely cheap fees. Additionally, users may receive rewards when they pay with cryptocurrency via the company's renowned Visa card, which offers up to 8% cashback on purchases. While Crypto.com provides a variety of financial and cryptocurrency services, it does have some limitations. Although Crypto.com is a regulated site with decentralized elements, it is not suitable for all consumers. Due to the centralized nature of the program, Crypto.com does have geographic restrictions on some of its services. Keeping this in mind, the U.S. crypto exchange is not accessible to all residents of the United States. Get your cryptocurrency taxes taken care of in a matter of seconds for free. Crypto.com provides complete support for people of Australia, Canada, and the United States. Crypto.com provides this service free of charge in recognition of the general uncertainty and confusion that these tax consequences may cause. As a regulated and centralized platform, Crypto.com is required to issue its users with a 1099-K document for tax reporting purposes. All purchase, sell, and exchange activities conducted on the platform must be recorded, much more so if the gross revenues from the transactions meet or exceed the level set by the user's local state. For the majority of states, the threshold is $20,000 plus 200 IRS-mandated transactions. If customers exceed this threshold, they should anticipate receiving a 1099-K form in the mail no later than January 31st. It's prudent to consult a tax professional or make use of Crypto.com's free cryptocurrency tax service. The user must ascertain whether components of their gross volume are taxable. The world's fastest and safest cryptocurrency exchange adheres to regulatory requirements. Crypto.com offers a diverse selection of products geared towards consumers with varying levels of experience, from beginner to advanced. Given how Crypto.com has evolved into what it is now, it's unsurprising that the application is so popular. To empower more inexperienced traders in cryptocurrency markets, the mobile application offers users with the necessary access and support to engage in and report on all of their trading actions. PayPal is expanding cryptocurrency services in the United Kingdom. What you should know. PayPal Holdings announced Monday that it will begin offering Bitcoin and other significant tokenized assets to consumers in the United Kingdom this week, marking the payment giant's first worldwide push into crypto services since launching them in the United States last year. However, regulators are sure to scrutinize the decision. The announcement comes at a favorable time for Bitcoin values, which temporarily surpassed $50,000 late Sunday for the first time since May, after falling below $30,000 last month. PayPal, PYPL, shares increased 1.3% on Monday, falling short of the 1.7% advance in the broader Nasdaq Composite Index. The preamble. PayPal's decision last year to extend crypto services to its U.S. customers was a watershed moment on the path towards institutional adoption of Bitcoin and other crypto assets. PayPal's and Square's move also aided in igniting a flurry of retail investor interest in Bitcoin. When PayPal announced the U.S. launch in October, a single Bitcoin was valued less than $12,000. In the United States, cryptos are controlled by the Securities and Exchange Commission, which has not hesitated to intervene. SEC Commissioner Gary Gensler stated in August 2020 that Bitcoin does not provide enough investor protection. It's more Wild West, he explained. Regulators in the United Kingdom have mostly focused on consumer rights and protections, with the Financial Conduct Authority, FCA, warning in June that investors in crypto assets should be prepared to lose all their money. Regulators in the United Kingdom also prohibited prominent exchange Binance from engaging in regulated activity and prohibited another exchange from running an advertising campaign that was deemed misleading since it stated that it was time to buy Bitcoin. What is novel? PayPal is now allowing users in the United Kingdom to purchase, hold, and trade Bitcoin, Ethereum, Litecoin, and Bitcoin Cash on its platform. PayPal is putting a strong emphasis on education and consumer protection as part of its first worldwide extension of crypto services beyond the United States, adding that it will provide access in a secure and responsible manner. Additionally, the payments giant stated that it will encourage clients to conduct research and educate themselves about the risks associated with cryptocurrency transactions before engaging in transactions. With our global reach, digital payments expertise, consumer and business knowledge, and stringent security and compliance controls, we have the unique opportunity and responsibility to assist people in the United Kingdom in exploring cryptocurrency, said Jose Fernandez de Ponte, a PayPal vice president and manager overseeing the company's blockchain, crypto, and digital currency work. We are dedicated to continuing to work closely with authorities in the United Kingdom and throughout the world to give our support, and to meaningfully contribute to shaping the role that digital currencies will play in the future of global finance and commerce, de Ponte added. Considering the future, PayPal stated following its growth that cryptocurrency has the potential to become mainstream in the United Kingdom. The corporation could be correct. However, standing between the company's approach and widespread adoption is a consumer base in the United Kingdom that may not be a good fit. According to FCA research published in June, the majority of the UK's 2.3 million crypto asset owners were typically uninformed of consumer warnings, and 14% had borrowed money to finance crypto investments. According to March research from British broker AJ Bell, the majority of cryptocurrency investors lack a tax-free savings account and are significantly more likely to lose money on their crypto investments than volatility would suggest. PayPal has thrown its hat in the ring in response to regulatory worries, emphasizing the educational content it will post alongside its cryptocurrency service, including information about the risks. That is to be applauded, though there are already instances of customers acting recklessly, said Laith Khalaf, an analyst at AJ Bell. PayPal's involvement in the crypto market is beneficial because it is a well-known, publicly traded firm that is already subject to regulatory scrutiny. However, the crypto frenzy as a whole continues to be a source of concern for consumer advocates and regulators, Khalaf noted. At the moment, the United Kingdom's crypto community resembles less ethical customers willing to pay with Bitcoin via PayPal and more over-eager retail investors. That, of course, might change, and PayPal's entry into the field could accelerate acceptance. However, that path may be plagued with regulatory scrutiny from regulators who are acutely aware of consumer harm and unafraid to intervene. This is something to look forward to for traders and investors who are hodling EOS. Despite the fact that the broader crypto market has performed admirably over the last 24 hours, a few altcoins continue to struggle under the pressure to perform better. EOS, the market's 31st largest cryptocurrency, was one of them. This altcoin was trading at $5.49 at the time of press, after rising by just 0.1% in 24 hours. Reactions of traders. Between 8 and 18 August, EOS's financing rate reached abnormally high levels on all major exchanges, including Bybit, Gate, and Binance. A high financing rate typically suggests that traders are enthusiastic on a coin's near-term token's prospects. Notably, on two instances, 13 and 17 August, rates reached 0.129% and 0.132%, respectively, on Gate and Bybit. During the same time period, the altcoin's value fluctuated between $4.20 and $5.90. As EOS's price failed to break over the key $6 level, traders' narratives began to shift, and the funding rate began its downward trajectory. Sentiment statistics also revealed an increase in EOS's spot volume during the same 10-day period. Generally, the volume was in the $2 billion range. However, at the time of press, the figure had returned to the $1 billion area. For that matter, the circulating market capitalization was as low as $4.3 billion on the 8th of August. It did, however, reach a peak of $5.4 billion on the 16th of August. This conclusion appeared to indicate that there were more EOS tokens circulating around among market participants at the moment. With sell-side pressure reviving, the same was back to the $5.10 level at the time of press. Is there something to anticipate? Notably, discussions of EOS's exchange going public began to gain momentum towards the end of June. Within a few days, it was announced that the exchange will go public on the NYSE via the SPAC route before the end of the year. Interestingly, the exchange's private alpha version was launched on the 27th of July. Now, on the 19th of August, just a few days ago, the ESEO Market Data Oracle was also unveiled. This oracle, developed by AlgoTrader, would provide free access to real-time market data on the EOS public blockchain. The project is notable for its open-source nature and its potential for developing new products such as synthetic instruments, derivatives, and stablecoins. Additionally, EOS's development activity has accelerated. Sentiment's data corroborated this assertion. At the end of July, the value of this indicator was swinging between 19 and 20. Within 3 weeks, the same had nearly quadrupled to 41 at the time of press. What comes next? The altcoin has been trading quite near to its support levels during the last couple of days. Indeed, EOS was trading above its 200-day SMA at the time of press. It does, however, encounter immediate pushback at $5.60 and $5.90. It makes sense for traders to expect EOS's value to go as high as $6.50 if it manages to break above them in the coming trading sessions. Failure to do so would revert EOS to its $4.90 to $5.10 range. Given the status of leveraged traders' sentiment, spot volume, circulating supply, and price chart trend, it's reasonable to assume that the alt's next few days will be rather difficult. However, when the pace of development and exchange rates are considered, the long-term outlook appears to be quite favorable. AMP price increased by 12.64%. Is now a good time to buy AMP? The cryptocurrency market is gradually emerging from the bear market of the previous 3 months. This has resulted in the upward movement of numerous encryption schemes. AMP, a blockchain platform focusing on digital collateral, is one such example, having increased 12.51% in the last 24 hours. However, before purchasing AMP, it is essential that you have an understanding of the protocol's objectives and adoption. AMP, collateralizing value transfer via blockchain. The cryptocurrency industry is flooded by protocols that seek to build upon an existing network and establish a competitive position. The AMP blockchain operates in a unique manner. The AMP blockchain, according to the development team, aims to function as a decentralized digital collateral system. AMP enables developers to deliver verifiable assurance for the programs or assets they construct. This is accomplished through the use of collateral partitions and managers. Collateral partitions are used to collateralize any account, application, or transaction on the Ethereum network and to display verifiable balances. Collateral managers, on the other hand, are smart contracts that lock, release, and redirect collateral within partitions to facilitate value transfer. Although AMP is used in a variety of settings, its primary goal is to prevent fraudulent actions on the blockchain by collateralizing assets prior to their transmission. This helps mitigate the risks of loss associated with the transfer of wealth. It is the next generation of completely secure networks. AMP blockchain enables immediate and secure asset collateralization and is scalable, making it suitable for serving the rapidly developing blockchain community. It now supports over 25 different virtual assets and is integrated with leading crypto protocols such as the Flexer network, Gemini, Sushi, and Uniswap, as well as cryptocurrency aggregator coin, Gecko. Token ERC20 AMP is the AMP blockchain's utility token. Holders of the AMP token can participate in network activities. Additionally, it is deflationary in nature, with a fixed coin maximum of slightly more than 92 billion AMP tokens ever in circulation. AMP, welcoming the bulls back. AMP has had a tremendous year thus far, but has been mostly hurt by extreme volatility. Despite this, the crypto asset has made a statement, and with its one-of-a-kind generic use case, many crypto investors are becoming aware of the protocol and interested in purchasing AMP. Meanwhile, its price movement has mostly tracked that of Bitcoin. AMP began the year at $0.006548 and surged to $0.05978 on April 19, a gain of more than 2,000% in 4 months. It was not, though, and proceeded to rise, reaching a new high of $0.07516 on May 8. Despite the bear market's dominance, AMP staged another recovery, topping out at an all-time high, ATH, of $0.12081 on June 16, but it was unable to sustain this price action. This resulted in a more than 50% decline in its value the following month. AMP, on the other hand, is setting the tone for another rise, trading at $0.06655, up 12.64% on the daily chart. This renewed spike is a result of Bitcoin's recent growth. Analysis of the technical and fundamental aspects of AMP. We can observe from AMP's technical analysis that the digital coin is in an upswing. It is currently trading above the 20-day moving average's short-term price of $0.061145. Its Relative Strength Index, RSI, is rapidly increasing and is currently at 59.85. This indicates that more investors are warming to the notion of include AMP in their cryptocurrency portfolios. Additionally, market analysts feel that AMP is still on track for a strong year-end. Wallet Investor predicts that AMP will trade at $0.145 by the end of the year. AMP is expected to trade at $0.482 during the next 5 years, according to its prediction. Considering its principles, AMP is gradually gaining traction. Currently, the protocol supports 25 digital currencies and is integrated into numerous leading crypto protocols, including Uniswap, Sushi, and Flexer. With an increasing number of users seeking to back or collateralize their assets, AMP will gain significant value over time. This could be an excellent moment to purchase at a discount. This year's crypto savings accounts to get you in the game. Are you a cryptocurrency owner who wants to save your coins? Similarly to bank savings accounts in traditional finance, crypto enterprises across the ecosystem provide a savings plan for consumers who want to earn passive income on their crypto assets. By simply staking your crypto assets with a service provider, you can earn interest rates of up to 20% APY on your crypto holdings. In this post, we will go over some of the advantages of having a crypto savings account, as well as the best crypto savings account and why crypto savings accounts may soon replace traditional savings bank accounts. The advantages of saving in a crypto account. Before you decide to invest in any crypto savings account, you should be aware of the rewards and hazards. It is evident that crypto savings accounts do not work in the same manner that regular savings accounts at banks and credit unions do, which may provide consumers with both benefits and issues. The following are some of the advantages that crypto savings accounts may provide users who invest in the platform. Passive income. The goal of saving is to have a passive source of income while your assets are safe. Instead of keeping their funds in their wallets, crypto saving accounts allow users to earn passive income. Crypto interest accounts. Unlike regular savings accounts, crypto savings accounts denominate and pay interest in either USD or crypto-based interest rates, such as Bitcoin interest accounts. This allows crypto enthusiasts to immediately accumulate their preferred crypto assets. Higher returns. Because of the price volatility risk, crypto savings accounts offer a higher rate of return on deposits, averaging 5% to 12% APY, compared to standard bank savings, which offer only 0.5% APY. If you're willing to accept the risk, a crypto savings account could help you save more money. Crypto asset security. Crypto savings accounts allow users, particularly newcomers to cryptocurrency, to securely keep their assets, lowering the likelihood of their losing access to their wallets. Some platforms, such as Crypto.com and AAX Exchange, also provide insurance in the event of a hack. Finally, some crypto savings accounts, such as Binance, provide users with benefits, tokens, and additional incentives, raising the overall rewards from savings. Savings accounts to get you started. Now that we've covered some of the advantages of saving in crypto accounts, we'll look at how newcomers and professionals can use savings accounts to create passive income. BlockFi. All registered customers have access to BlockFi's interest account, VIA, which allows you to earn up to 7.5% APY on your staked crypto assets such as Bitcoin, Ethereum, USDC, and others. There is no minimum balance requirement for the crypto savings account, and there are no hidden fees. The interest rates, USDC interest account and BTC interest account, accrue daily and are paid directly to your wallet every month. As one of the best crypto savings accounts, BlockFi ensures that users' assets are kept in cold storage and that they have FDIC insurance coverage for cash assets lost due to theft of up to $250,000. BlockFi, in addition to its savings service, provides crypto loans to chosen consumers. The site solely charges withdrawal fees, which vary depending on the cryptocurrency asset. Bybit. Bybit just launched their crypto savings program, which now supports 10+ coins on their Earn platform. The cryptocurrency derivatives trading platform provides crypto savings accounts with APYs of up to 8% on chosen crypto assets. The exchange has no minimum deposit requirement for the savings account and only the withdrawal cost is paid, which varies by asset. Nexo. Nexo is most known for its lending platform, but it has also created a reputation for itself in the cryptocurrency savings market. Nexo's high-yielding interest accounts offer up to 12% APY on a variety of crypto assets, with interest paid daily. It has easy interest payments and a short lock-up period, less than 24 hours. The highest yielding rates, on the other hand, are exclusively available to participants of the Nexo loyalty program, which is based on ownership of the native Nexo token. Nexo offers more than $100 million in insurance to cover its users' money. Coinbase. If you are a first-time crypto user, the Coinbase exchange in the United States is the most straightforward way to begin your crypto savings journey. While the exchange has just recently entered the savings niche, its products have seen a surge, with account customers earning up to 1.25% APY on their USD coins in their wallets. Coinbase allows customers to withdraw their money whenever they choose, making it a viable option for short-term investors by providing them more control over their assets. The exchange has yet to make its crypto asset savings available to the general public. They began allowing chosen customers to stake Ethereum in April 2021, providing profits of up to 6%. Although the service is not presently open to everyone, you can join their waitlist. The exchange charges a multitude of fees, including withdrawal fees and 0.5% spreads. The FDIC insures users' USD deposits up to $250,000 in investment. AAX Exchange. AAX Exchange, situated in Asia, is a privately held digital asset exchange that is driving crypto adoption in the Asia-Pacific area. It is the first crypto exchange powered by LSEG Technologies Millennium Exchange and has recently joined the London Stock Exchange Group's, LSEG, partner platform. The exchange just launched its own crypto savings platform, which offers the best crypto savings rates yet, with users earning up to 20% APY on their assets. In its 7-day fixed savings product, AAX delivers the highest APY on centralized finance crypto savings on assets such as Bitcoin, BTC, Ethereum, ETH, Tether, USDT, and USDC. Users may quickly transfer their USD, EUR, and GBP to the exchange and begin saving right away thanks to a variety of fiat on-ramp choices on the platform. There is no minimum account balance requirement, and the savings account only charges a withdrawal fee. Interest is calculated on a daily basis. Gemini. Over the last 3 years, the Gemini Exchange, founded by Cameron and Tyler Winklevoss, has established itself as one of the safest and most regulatory-friendly cryptocurrency exchanges. After just establishing their cryptocurrency savings account, Gemini Earn, the platform is a viable choice for trading and investing cryptocurrencies. The exchange provides 39 cryptocurrencies with savings alternatives, with interest rates of up to 7.04% APY on specific crypto assets. By staking their BTC on the Gemini Earn account, users can earn up to 1.65% APY. There are no deposit fees, but withdrawal costs differ according on the asset after withdrawing 10 coins per month. Gemini Earn charges agent fees, which vary each coin and range from 0.04% to 4.3%. The platform has launched a $200 million insurance fund in the event of a crypto asset loss. Celsius Network. Celsius Network provides one of the simplest methods for opening a crypto savings account and receiving weekly interest. Users merely need to deposit funds into their preferred account to begin earning passively. The network begins paying interest once a week, and you can withdraw at any time. The platform, on the other hand, offers significantly higher rates but lacks complete clarity on how the interest rates are determined. On 14 different cryptocurrencies, interest rates are paid based on loyalty tiers ranging from 2.02% to 17.78%. Crypto.com. Crypto.com services desk has evolved from a rigorous on-ramp platform to one that provides trading services, savings accounts, and buyback options to its users. However, when it comes to saving, the platform prioritizes individuals with large sums of money, thereby shutting out small-time crypto savers. The saving accounts are divided into levels, each with its own set of activities that must be completed before you may begin saving on the site. Its Earn feature provides rates ranging from 0.5% to 8.5% for cryptocurrencies such as Bitcoin, and 14% for stablecoins such as USDC. Weekly awards in USDC are distributed by the platform. To begin earning the greatest interest rates, Crypto.com customers must stake CRO, the native coin, for 1 month or 3 months. 4 things to consider before choosing a crypto savings account. The interest yields previously mentioned appear to be attractive and may give investors a lot to think about when deciding on their chosen option. In this part, we go through some of the major characteristics you should look for before depositing money into a crypto saving account. Number 1. Token supported. Because no platform would enable savings for every crypto asset available, users must first determine which assets are available before they begin saving. Number 2. Withdrawal restrictions. Before depositing funds to any platform, make sure you understand the withdrawal lockup periods, fees, and any other restrictions that may apply. Keep in mind that some services, such as Coinbase, only accept deposits from investors in specific countries. Number 3. Asset security and insurance policy. Asset security is one of the most significant factors to consider when choosing a crypto savings account. To keep its clients' valuables safe, the platform requires a cold storage facility. While insurance is not prevalent in the crypto realm, it may play a role in your decisions because certain savings accounts protect their clients against theft and losses caused by hacks. Number 4. Simple or compound interest. Some exchanges, such as Nexo, offer a simple interest rate that is paid out daily to your account. However, if you need the interest to earn interest, you should use platforms such as AAX Exchange, which offers daily compound interest. Australians may now spend their crypto through new cards. However, they will incur a tax liability. Although cryptocurrency came into the public consciousness as a highly volatile speculative asset, the industry aspires to make it far more pervasive. Now, the first green shoots of its growth are growing, with features such as staking enabling users to earn income above market rates on their holdings. However, many believe that the ability to spend cryptocurrencies as readily as bank notes in your wallet is the critical next step. Allowing investors to immediately transact with their earnings might possibly close one of the few remaining significant divides between decentralized and fiat currencies. To that aim, Australia is beginning to see the debut of elegant crypto cards that promise to enable users to spend their coins smoothly, including Bitcoin, which again crossed the $50,000 mark this week. CryptoSpend said on Tuesday that it would begin accepting Visa payments in September. CoinJar already has a MasterCard, and global app Crypto.com offers a rewards scheme in Australia in addition to its own. Meanwhile, regional startups such as CoinStash are developing new products. The real cost of cryptocurrency spending. Despite the fact that a flood of these items is hitting the market, there is one significant drawback that the public is unaware of. Underneath the glitzy marketing is an assumption that consumers understand they may pay more than the retail price for items purchased with them. Why? Because each transaction is required to be registered with the Australian Taxation Office, ATO, and is almost certainly subject to capital gains tax, CGT. Crypto to fiat debit cards are taxed similarly to any other cryptocurrency transaction. At the point of sale, the cryptocurrency is converted to Australian dollars, triggering a CGT event, according to an ATO representative. Despite this, just one of the products investigated by Business Insider Australia, Crypto.com, admitted on their website that users may be taxed on any and all purchases made with the card. The operation of cryptocurrency cards. The concept behind these cards is rather straightforward. Customers use their card at the checkout in the same way they would a debit or credit card. Typically, the exchange of crypto for fiat occurs at the point of sale, or when you touch the card, sending crypto from your wallet and Australian dollars to the merchant's bank account. As an example, suppose Christine is in the market for a $5,000 wristwatch. When Cartier requests 5,000 Australian dollars, the exchange often launches the sale of $5,000 worth of cryptocurrency holdings, based on her predetermined desire, and uses the profits to purchase the watch. Additionally, it may sell a few extra units to cover transaction costs. That is 1%, or $50 in our example, in the case of CoinJar. Each item is clearly labeled with these costs, and our shopper leaves with a beautiful watch on her wrist and $5,050 less in her pocket. However, customers would be forgiven for failing to realize that the $50 fee is likely the least of their concerns. To illustrate, consider Christine's purchase of a clock in our previous scenario. Christine purchased Bitcoin for $25,000 in December, 8 months before walking into the Cartier boutique. In July, when Bitcoin was trading at $50,000, she purchased her watch. She paid 0.1 Bitcoin plus transaction fees for her $5,000 watch at the time. The ATO is unconcerned about Christine's expensive new watch, but it is concerned that she profited by selling her Bitcoin for $2,500 more than she paid for it while waiting for the shop clerk to box up her bling. Australians are generally required to pay CGT on coins sold for more than they paid for them, regardless of how they dispose of them. This is paid at the same rate as the individual's marginal income tax rate for the majority of people. Christine purchased it less than a year ago, thus she is not qualified for the 50% capital gains tax deduction, and the ATO requires her to pay income tax on her $2,500 profit. Christine would owe 32.5% of her income, or $812.50, at the end of the fiscal year if she earned $80,000. On July 1, 2022, Christine may be surprised to learn that the $2,500 what she purchased in August cost her around $3,362.50 after taxes and fees. Tax time bomb on the verge of detonation. Christine would have effectively paid the same amount had she first sold her Bitcoin, converted it to fiat, and then paid using her standard debit card. However, according to Mark Chapman, H&R Block's Director of Communications, the card's true hazard is that it obscures that obligation for consumers. Cryptocurrency debit cards are a ticking tax time bomb, Chapman explained to us. Taxpayers must be aware of this before applying for one of these cards or face a severe tax surprise later. The ATO quickly adds that after a year's worth of transactions, deciphering what you may actually owe may become substantially more complex regardless of whether the assets have appreciated or not. People should retain accurate records of transactions, including the date of the transaction, the value in Australian dollars at the time of the transaction, the purpose of the transaction, and the other party, even if it is simply their wallet address, an ATO spokeswoman said. It is best to keep track of your transactions as they occur, saving copies of receipts and utilizing spreadsheets or crypto accounting software. Indeed, this is why Crypto.com requires consumers to manually sell their assets before they may spend their winnings. The purpose of the friction is to force the investor to make a conscious decision to liquidate the asset based on their tax responsibilities and financial circumstances, Asia Pacific General Manager Carl Mohan told Business Insider Australia. Mohan notes that while the system, like CoinJar's, includes an integrated tax tool to assist customers in meeting their requirements, the onus is on you as an investor. Common cryptocurrency. This places platforms in an intriguing position, as they attempt to offer creative methods to use cryptocurrency while still adhering to occasionally antiquated or non-existent legislation. There is no doubt that CGT issues exacerbate the appeal and expansion of this burgeoning product category. Despite this, we make administrative requirements as simple and painless as possible, CoinJar CMO Dominik Gluszowski told us, adding that users are guided via smart EOFY statements. Despite their potential complexity, there is certainly a market for card goods. Gluszowski continued, despite the restrictions as they are, tens of thousands of Australian clients have been using CoinJar Swipe since 2015, referring to the company's long-standing prepaid card option. As solutions like CoinJar Card enable individuals to use cryptocurrency in their daily life, we want to see a renewed emphasis on the unique characteristics of this novel and quirky asset class. While the cohort responsible for building them asserts that the next generation of financial goods is still important at the moment. This is simply a more convenient way to sell it, CryptoSpend CEO Andrew Gretsch told us. Not only are we making things easier for consumers, but we're also expanding the ways in which they can utilize these digital assets in their daily lives. Customers Bank intends to offer banking services and blockchain-based payments to crypto enterprises. The bank, situated in West Reading, Pennsylvania, intends to give crypto companies both basic accounts and a blockchain-based platform that would enable them to move dollars to one another in real time. Despite the growing popularity of digital currencies, the majority of banks remain wary of providing financial services to crypto companies. However, a few financial institutions have defied the trend and decided to cater to the banking needs of cryptocurrency firms. According to CoinDesk, Customers Bank is the latest to join the short list of FDIC-insured financial institutions in the United States eager to offer banking services to crypto companies. The West Reading, Pennsylvania-based bank announced plans to give crypto companies both basic accounts and a blockchain-based platform that will enable them to transmit dollars to one another in real time. We are well positioned to be a powerful third banking alternative in the digital asset space, Customers Bank head of digital assets Cameron Summers said. The primary objective is to establish a low-cost deposit franchise in a manner similar to what Signature Bank and Silvergate Bank have accomplished. Due to worries about Know Your Customer, KYC, and anti-money laundering, AML, rules, the majority of US banks are hesitant to give banking services to crypto companies. Once Customers Bank begins delivering its services, it will face competition from New York-based Signature and California-based Silvergate, which both offer similar services to cryptocurrency enterprises. Customers Bank Vice Chair and Chief Operating Officer Sam Sidhu said, "Customers continue to look for ways to be connected, engaged, and intrigued in the cryptocurrency sector. Some banks may provide users rewards or custodial services. We are concentrating our efforts on enterprises that may serve those clients directly or indirectly." Customers Bank will begin testing its blockchain-based payments platform in September with 10 to 15 clients. The bank teamed with technology supplier Tassat to bring this service to the rest of its clientele beginning in October. Once we have a fully operating ecosystem with a variety of various types of institutions on it, the plan is to continue expanding from there and possibly add some other products and capabilities to our offering, Summers explained. Customers Bank has assets of $19.6 billion, which is approximately 0.52% of the size of JP Morgan. Tassat has been marketing its products and services to small to mid-sized financial institutions. The country's largest banks are experimenting with blockchain technology in order to create new services and lure deposits and clients, frequently away from small and mid-size institutions, Tassat CEO Ron Totaro said. What they possess that small and mid-size institutions lack is a sizable budget, personnel, and the capacity to experiment. By contrast, small and mid-size banks must demonstrate a return on investment for every dollar spent on technology. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.